Hi, and welcome to our webinar Atma Markets Weekly Market Outlook with and by Jens Klatt. Today it's June the 22nd, 2018, and let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you like to read the key information documents, the kits, or the full risk disclaimer, just visit one of our web pages, for example, atmamarkets.com, and you will find everything placed there. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 CFDs, typical spread of just 0.8 points during the main trading hours. Check all the details out on atmamarkets.com. On atmamarkets.com, you will also find some information about the upcoming ESMA regulation. As you maybe know already, from Monday, 30th July 2018, there will be a difference in the market in the European Union about retail clients and professional clients. Retail clients will get the maximum leverage for Forex majors of just 30, and professional clients still can get a higher leverage up to 500. There are some more differences. For example, about the negative balance protection, retail clients will have an unlimited protection, and professional clients will get the big benefit of a negative balance protection policy by Atma Markets, a protection up to 50,000 British pound account by account. Check all it out on atmamarkets.com. The exact link you will see directly now. And if you'd like to speak with us about that or any other topic, call us or send us an email. YouTube and Facebook, also some channels from us. Everything is linked on atmamarkets.com. That's enough for my info, and now it's time for Jens. Hi, Jens Klatt. Now it's your time. Let's have a nice start.
Yeah, hello, and welcome also from my end. Thanks for the very nice introduction. And yeah, we want to have a look at the markets. What happened yesterday, especially. What will happen probably today. By the way, 1 second, please. I'll just share my screen. Whoop. Yeah. So that's me, and let's have a look here at the agenda probably first. I think that makes the most sense. So the agenda today will be that we are wondering what are the key economic events in the coming trading week. So there are, in fact, some interesting key events, not necessarily for the DAX, for example, but probably from New Zealand here. There's a rate decision. Also, there's a good chance that probably the OPEC decision, the OPEC meeting today and tomorrow taking place in Vienna, could leave especially commodity prices vulnerable to big swings, especially crude oil. We want to have a look at the current bias in the FX equity and commodity markets. Bias, especially in terms of how's the market positioned. Commodity markets here, interesting, really interesting. That's one of the reasons why the OPEC is such a big event. Already read, as I said, starting today, but not sure whether it will result, the decisions which are made there, which will result in volatility, but it's possible that key decisions will be communicated tomorrow when markets are closed, and then we probably will open with a sharp gap higher or lower, depending on the communication taking place there. And then, sure, we want to have a look here at which potential trading opportunities may arise here. And in fact, that's it here with the slides. I already prepared some charts, and this is in case WTI, the daily chart here, and probably we'll start with this, with the outlook for the OPEC. First things first, I don't think that we have a good chance to formulate a trading setup. So I, in fact, be really careful right now to formulate any trading setup here, because volatility is expected to be really high if there is a huge, let's call it, divergence from what the market currently expects here. But first of all, it's very spectacular from a fundamental perspective, but also from a technical, from a sentiment perspective. For example, technical slide, you can see here that we've already broken this quite significant trend line, which can be seen here in blue. We've already broken it several weeks before, so in fact at the beginning of June. And after the break here, the market already retested this region, is currently drifting shifting towards the region. Nevertheless, it's already a first sign that probably the momentum on the upside is about to end here. And we can combine this with the Commitment of Traders report, which is showing a quite a heavy net long position in crude oil speculative positioning. And again, then the OPEC decision now is about to probably give the final impulse here for higher volatility, in this case, currently on the downside, especially if they deliver something which is showing that we have to expect a higher production output here. And we're here currently talking about probably something in the region around 1 million per barrel per day. And that's quite not per barrel, it's 1 million barrel per day that way. And this is in fact quite huge and significant. But before we can have a look at the event, which is again taking place right now in Vienna, right at this moment, by the way, and will be continued tomorrow. Then we want to have a look here into the past and zoom radically into the chart and start here with price action back starting already in 2014. So in fact, we could also look a little further into the past here, but this is fair, or this is good enough here for our research we want to do here. We traded around 100 and also above this level here, around 4 weeks. 4 years ago, and then we saw, and if you might remember that, we saw some heavy and huge losses in WTI. We saw a complete collapse here that had mainly to do with the fact that there was a huge output, production output here, and there was also crude oil inventories were at their highest levels ever measured here. And yeah, what was the result? The result was that there was an oversupply in WTI, which resulted in a crash here, and which in fact usually you hear that, well, low oil prices are good for the economy because companies now can produce in a cheaper way. It costs, and that widens the margins, the gains these companies have to expect. Well, that's probably a good sign for the overall economy then, because it can grow at a faster pace. In this case, things were different because since 2010 already, especially in the US, for example, there was the fracking industry, which escalated enormously and saw some huge growth rates. And thanks to the cheap money from the central banks, especially the Fed back then, and after the big financial crisis, there was kind of a bubble forming into the US here. And those companies in this industry, they need a certain price level, which was hugely undershot here back then. So I don't really know the exact numbers, but I think a rule of thumb is something like 50 USD per barrel are the level among which those companies usually are expected to work profitably or at least break even. And we've seen a huge slide below that level. WTI prices went as low at the beginning of 2016 as low as $27 per barrel. Prices going up threefold here. So we are up 100% from these lows in the last two and a half years in WTI prices. And so how comes that here the WTI prices were capable of starting such a rally? It was that the OPEC decided to cut production here and make sure that this oversupply is reduced, more and more reduced. And in fact, we are now at a point where, in fact, the output can be raised again. And this is exactly this meeting taking now place. Now there's something interesting happening. So that's the history behind this development, even though it's a very rough overview, but it gets the job done. Now the interesting thing starts. From a political landscape, you can see some very, very interesting things developing, which could cause some volatility here because you don't really know in which direction the decision will be made. Now, therefore, we want to have a look at those OPEC, those participating countries here. So I'm not mentioning all of them, but the big players, let's say. So there's Saudi Arabia, that's no big surprise. There's Russia, there's Kuwait, there's Iran, Iraq, and Venezuela, for example. So now we know, especially when looking at the Iranians and at the relationship with the Russians, that there is a strong connection thanks to the Syrian, the war in Syria here. Okay, that said, the Russians came out over the last weeks, and probably that's one of the reasons why here we've already seen a quite WTI. What do I mean with that? I mean, we're coming down from something like 72.50 USD per barrel down to 63.50. So this is more than 10% correction we've seen here. And the Russians, they said that they'd like to see the chin going up to 0.5 million per day. So currently we are at, if I'm not mistaken, something around 300,000. So 5 times more. The Russians are do want to see a rise here by 5 times more, which is quite significant, quite huge, to be honest. And I mean, now we could start to speculate why this is the case. Probably they are fine with lower oil prices. They know that here lower oil prices would probably hurt the Russian economy, but they wouldn't be hurt as hard or hit as hard by lower oil prices as, for example, the US economy. And probably Donald Trump gets or sees some pressure then if the oil prices see a significant push on the downside again, and the US economy will face another, let's call it headwind here. Remember, we know that the yield curve here, 2-year, 10-year yields, is currently as flat as it was last time, so something around 40 basis points, 50 basis points. That has we have seen that in 2007. That was shortly before the big financial crisis hit. So what does a flattening in the US yield curve mean, or in general, what does it mean? It means nothing more than short-term yields are rising, while long-term yields are stable, respectively, are probably also falling slightly. That has something to do, we all know that the Fed currently is hiking rates. And we have, nevertheless, a skeptical outlook for the U.S. economy here. For the U.S. economy, mid to long term, and people are currently not willing to, in this case, expect yields to be quite high, or at least higher than they're currently, because of a potential recession forming on the horizon there. So WTI, if oil prices fall again quite significantly, as they did 3-4 years ago, that would push the US in a very, very difficult spot here. That said, that's probably the reason why the Russians want to see output here pushed significantly higher. It's just purely speculative. I don't know if it's true or not, but nevertheless, something to think about. So now the interesting thing is that Russians and, for example, Saudi Arabia are on the same page here. The interesting thing now is, remember the Syria war and the cooperation here between, or the alliance between the Russians and the Iranians. The Iranians do not want to see oil output to be risen too high, because this would somehow dampen the outlook for their economy to some extent. So now the Iranians are the enemies of the Saudi Arabians. So, and here something really interesting is happening right now, because we don't really know which deal behind the scenes will be made here, and in which direction they rather sooner than later will come out here. OPEC meeting taking place today. So right now there is an assumption which says that probably they will agree on something like pushing the current output here production output to something like 500,000 barrel per day. So that's something which is currently communicated. There were also right now already some rumors around this meeting that they probably will push it slightly higher than that. So something in the range around 500 to probably 800,000 barrel per day. The interesting thing is that currently, obviously, WTI prices do not react that aggressively to this outlook, but are quite stable, rising slightly. I mean, they are about to increase the oil output here, and this should usually based on the assumption that you get to see a higher supply in the market, while the demand probably stays the same. Probably is even the outlook for the demand here is worsening based on the fact that there's a potential recession forming, for example, in the US, but also China has some problems in their economy. For example, emerging markets are seeing some problems based on the fact that the Fed is currently already in a rate hike cycle, rising rates. So the thing is that we would expect WTI fall on such a news here, which is currently not happening. But nevertheless, this could nevertheless happen after the weekend then. And if some bigger sellers finally way into the market, especially then, if we come out somewhere above those 500 to 800,000, which are currently speculated about. And now the thing is, why do I especially expect bigger selling pressure to happen then? This has something to do with the markets and their positioning right now. So let's have a look here at a chart already prepared. By the way, this is the website from Adam, the analytics tab, and there the Forex column. After I'm done here with the presentation, so we want to have a look at what's happening today. There's another news event taking place. In fact, it's the inflation data coming from Canada, which I already prepared here in this tab, as you can see. But first of all, let's have a look at this chart. It's a chart from another analyst, former colleague of mine, who is here showing the current speculative, the net futures positioning in this case. So as you can see here with this let's call it turquoise line, it's light blue in this case. You can see that the market is currently long 600,000 contracts still. So we already come from something above 700,000 contracts. This chart goes back to 2007, and you can believe me, that was by far the highest net long positioning we have seen in WTI ever. So market is still, even though we've already seen a pullback here, is still very, very net long crude oil prices, or crude oil in general. So speculating on prices to go up here. So if such a news now comes over the ticker and is saying, well, guys, we are about to increase the production output by more than what's currently anticipated, 500,000 barrel, 500 to 600 to 800,000 barrel per day. This could then lead to a big sell push or selling pressure here, resulting out of those market participants who are currently long, aggressively long WTI. And this in mind perfectly illustrates where the skepticism here comes, and why this break from a technical perspective of this trend line is even more significant, in my opinion, because it already shows that the market is probably about to top out a little. Nevertheless, and this is the other thing, if you look at it from in Germany we call it Markttechnik. I think some of you probably have heard about Dow theory.
Price action moving is the English word.
Oh, sure. Yes, I was about to refer to Markus Gabel in this case, who is probably giving some insights here over and over again every week, if I'm not mistaken. So probably he can give an idea on this too in one of his upcoming webinars, probably, because my opinion is that we are bullish as long as we trade below the 2018 in WTI. So this is around 58 USD per barrel. So far, in fact, this is probably a good region to think about long engagements. This is former high here. So these are the highs from the month of January in this case, respectively here from the month of March. We've broken it quite significant, trading back towards these highs. Okay, we're not testing them right on these highs, but digging a little deeper here, dipping a little deeper. Nevertheless, we're still bullish. But the thing is that this trend line, even though I'm not a big, I have to say that I'm not a big friend of trend lines, of diagonals here in this case, because the significance of them is, yeah, not that significant, to be honest. Yes, but in this case, it's probably slightly different because we can see that there are several times we tested this trend line here. So this break is probably an indication that is about to at least become lower, and that's, remember, especially in regards to this OPEC meeting, even though probably we don't get to see high volatility at all. Probably I'm complete on the wrong side here and expect high volatility, and then it's a non-event and no big thing happens. But you should definitely watch for, not necessarily only today, respectively, but in weeks probably, any bigger selling pressure, which TI could be a sign of further weakness. And from a risk-reward perspective, by the way, I think we're going to go below 63.50 here with a stop above these current highs here from, yes, these are in fact the June highs, which can be found around 67 here, 67.20, 67.30 probably. Then we still have plenty of room to go on the downside, as low as 58, and this means nothing more than we are aiming for 550 USD per barrel here, the downside, while risking around, let's say, which means that we are seeing a risk reward which is better 1 to 1.5, probably into the region around 1 to 2 in this case. So I think that's a very, very interesting development taking place right now, not only from a trading perspective, but in my opinion also from a political landscape. And we really do not know, discussions and potential deals are going on in the background, also based on the political situation and the alliance between the Russians and the Iranians in terms of Syria here, but also knowing that Russia and Saudi Arabia right now are about to collaborate in terms of pushing the production output higher. But all in all, the overall picture is definitely something worth watching, and probably we are about to see a bigger trend occurring then in the upcoming weeks to probably months here, and about to see something bigger happening here. And today is probably, or tomorrow, on this OPEC meeting, that's probably the event which then builds the path for what to expect in the upcoming weeks. So that's it on WTI, and now let's have a look back to what happened yesterday. Also something really in pound sterling. To admit, I was really surprised. So yesterday, all in all, was an event which had no real big meaning, let's say. So it was just like a BOE, a Bank of England meeting, monetary policy decision. We shouldn't have expected some surprises in terms of the rates, and in fact they can expected 0.5%, so nothing big, nothing new there. But, and this is the thing, nevertheless, the reaction is obviously impressive if you look at this. So this is the candle which started here at 12:45, in this case German time, so Central European time, and accelerated enormously then around 1 p.m. German time, and the momentum kept on building into the end of the trading day and still can be found here today. So it looked very good yesterday and continue with its momentum. Okay, what was said there? Then it's obvious that it has something to do with the Bank of England decision. It's the fact that there was also an expectation around the decision of the Monetary Policy Committee there. They expected 7 members of this committee to say, we stay on hold currently, while there are only 2, or there were 2 expected to say we want to see a hike, at least, not necessarily today, but at least in the upcoming months then. And the decision wasn't 7-2, but it was 6-3, because the chief economist, Andy Haldane, joined the side of the long-time hawks here. And by the way, those 2 were McCafferty and Saunders, just to give you an idea, names behind them. And now that was the initial, let's call it a wake-up call, after pound sterling has seen some enormous losses over the last 1.5 to 2 months here. By the way, just to remember what happened there, we made new highs here, new yearly highs. That was on the 19th of, I'm sorry, on the 17th of April. And then went sharply down from there. What happened? It was that there was comments from the governor of the Bank of England, was Mark Carney, but it was also that some data, economic data coming out there, came in below expectation. And the moment here we made new highs on the 17th of April, the chances in the swap markets were seen as high as something like 85% that there will be a rate hike from the Bank of England, at least one rate hike in 2018. And that was nearly completely priced in. And then those data sets came out, which disappointed. And the comments from Mark Carney came out. Mark Carney here saying that there is plenty of time for a rate hike on the upcoming events here, also in the second half of 2018. This was considered to be, meaning an expensive monetary policy call here. And what the market participants, or respectively the market, did was they completely priced out the expectation of a rate hike from the British central bank here over the next 1 to 1.5 months here, resulting in losses of over 1,000 pips. And there was only a short recovery here, and then we made this week new yearly lows here and traded as low as 131. That was, by the way, let me just see. No, we traded as low as 131.01. Low 31. But all in all, the overall picture is still not that bright for pound sterling. But the comments from yesterday, there is now there's some hope forming for the hawks, respectively pound sterling bulls, that we are probably about to see a sharp corrective move now. We are, again, here, as long as we trade below 134.50 to 135, we are bearish. So if we do not make it above this level, we shouldn't expect the bulls to really take over, since right now we are bearish as long as we trade below that level on the daily chart. Nevertheless, with this development yesterday, I'd at least reduce my willingness to position myself on the short side here in pound sterling. So if you're an intraday trader, you should definitely be really careful when it comes to short engagements and short signals you might trading, because chances are high that we are probably pushing higher instead of pushing lower from here. Nevertheless, on the other hand, I'm not necessarily the one now calling for aggressive long positions in pound sterling, because again, we're still bearish as long as we trade below 47.50 to 135. In fact, that said, we can have a look at what could probably drive pound sterling higher than next week, and therefore I've presented or prepared already here economic calendar. We've clicked on it on the website from Admiral Markets here already. Again, you can find it via analytics and there via the Forex calendar. So currently I am located in Berlin in Germany, so that's the reason why I want to go here with Euro Berlin. Means we have 1 hour later then London is 1 hour earlier. And what you can do here is also you can filter it by language, by the way. So, but nevertheless, sure, we will keep it here in English. And then you can adopt the dates here. So since we want to give an outlook on the upcoming trading week, definitely makes sense then to adopt this here from today. Again, there's one important meeting with the rate decision of Canada, not the rate decision, sorry, the inflation rate from Canada coming. And we want to extend it nevertheless to the 27th here. And then you can run it again. And it's updated then. And I'd like to use a filter here since we want to focus on the majors and only on the G7 then in this case. So taking out France here, Hong Kong, Italy, Singapore, South Korea, Switzerland, the Euro area obviously stays in. United Kingdom too, Spain can be taken out, South Africa, Russia. We'll leave Japan in, Germany can be taken out, and China also stays in. And as you can see here, now we are down to, oh, in fact, it's 8. I'm sorry. I took out the Chinese. Hopefully, they won't never hear about that. Okay, and then next thing is, I've also want to take out all the lower important events. So we only want to focus on the high impact events, potential volatility events next week then. And we apply the filter. And as you will see, okay, it happened already. So I have to, yeah. See now, we filtered this calendar and get a very, very good of what is potentially driving. Let's have a look here at the Canadian dollar. No, 1 second, I'm sorry. We want a final look at GDP. So in fact, next week on Friday, there is the GDP growth rate here, which is now something really interesting, because after the rate decision yesterday, with this slight hawkish touch, we should imagine, or we should expect data coming out, and if it comes out above the current forecast, which is at 1.2%, so something like 1.3%, probably hitting the same level as previous with 1.4%, then this is another potential driver, bullish driver, I'm sorry, potential bullish driver for the pound sterling in this case. And by the way, there's also something, but this is that important, obviously, because it's not listed here. But on Tuesday, there's also the there's a statement from Mark Carney, the governor of the Bank of England, in terms of the financial stability report. But that's something which never resulted in big volatility in the past, so potentially won't result in big volatility then in the upcoming trading week. But as you can see here, currently the economic calendar in terms of the pound sterling is very thin. Nevertheless, on the 29th of June, things could definitely change here, and chances are good that with the data set coming in above expectation, that here we have a good chance to probably see a further push on the upside if data comes out positive. On the other hand, very simple, in fact, if data comes in below expectation, well, this would then counter this impression from chief economist Haldane here, and probably result in a sharper decline than in pound sterling, probably giving back some of the gains. So what I expect for pound sterling is probably that we'll stabilize at the current elevated level with a slight push intraday on the long side, and the next potential event can be found next week on Friday, then 29th of June, and probably we'll get to see the attack if numbers come in as above expectation here. We can see an attack at this level, which is currently holding this bearish environment, pound sterling on the daily chart, in play. So now let's have a look at dollar Canadian dollar. Here, there has been already a significant break last week. So to be honest, I prepared the charts for this event, since I really I really love to do research and have a look at how things will develop in the upcoming week. And I really hope that there's no break happening of this quite significant region here, this this line, big red line. Unfortunately, we broke already above. So you can see here was a strong support. We've broken it then in 2017. That was a surprising rate hike from the Canada back then. We tested this region again here already in March, and now we've broken it. And as you can see, by the way, there was a wedge forming here, such a rising wedge, which is now making it possible potential target on the upside here, dollar Canadian dollar, after the breakout occurred. Now, the theme today's news is quite interesting to watch. Result in a pullback after the breakout occurred in dollar Canadian dollar could result in a pullback to this breakout level, which or the region, which can be found around 131 plus minus, let's say 20 to 30 pips. And then this is a potential long trigger. By the way, let me just draw a line here how this could look like. By the way, let me just probably make this a little bolder. There you go. So I'm talking about such a scenario potentially, or let's see whether the data comes in probably slightly above expectation. I can already say that's not that not that likely, in fact. But first of all, let's have a look here. If data comes in above expectation, so it means inflation rate comes in higher than expected. You usually expect the central bank of this country, in this case Canada, to say, okay, we are now about to potentially hike rates more likely in the future. And that's something markets then start to anticipate. And based on that, you usually should expect better than or a higher than expected reading in inflation, for example, to drive the currency of the respective country higher. In this case, such a scenario would be likely. So short-term bullish Canadian dollar, nevertheless, a pullback towards this region. I wouldn't take the short side here, but I'd welcome such a pullback, since it would increase the chances of a retest and the potential long engagements around again against 131 here in this case. And then probably this is then the starting point for a rally, which could probably push us back in the upcoming weeks to months, then up to 140 probably. But skepticism starts to rise. Is there such a high chance that we get to see a pullback? At least, 1 second here, at least based on the thing today. Therefore, I've prepared a chart from an external, neutral, and I highly recommend it website. It's tradingeconomics.com. They have tons of data, fundamental data you can analyze then into the past. So having a good economic calendar is crucial. You can see which events are most likely to impact the markets and drive them higher or lower and result in volatility. Nevertheless, to analyze this data, an economic calendar is not enough, because you can only see the previous event. But what you're probably more interested in is the development of those fundamental drivers. And therefore, trading economics is, I think, the place to be, in fact. And so the great thing about this is that, you can also have a look at the historic developments in the Canadian inflation rate here. And as you can see, they came in at 2.2% in April, so last month, coming down from 2.3%. And this is the interesting thing now. As you can see here, somehow chances start to rise that we are probably about to top out in terms of inflation. So let's see if this is really the case. But if the data today way, you can also scroll down. Okay, well, doesn't matter. Let's have a look here then. So is expected to come in at 2.5%, so quite high, in fact. So now the question is this really realistic? Looking at this chart here, I somehow doubt it, to be honest, and that's one of the reasons why I could imagine the numbers come in below expectation, probably around 2.2 to 2.3, which would, based on the forecast, be not so positive, and something to really see or start to be skeptical if is there such a huge chance that this momentum can continue here, or no, momentum, no, the momentum can continue. So is it possible or likely that we'll get to see such a corrective move, or will the momentum continue that way around? And we'll probably, on a reading which comes in below expectation, dollar Canadian dollar keep on going higher, not necessarily up to a 140, since we are still talking about a very deep currency pair. Expect such a huge push to happen here. But the thing is that somehow chances are, I think, more higher than we'll continue here with this momentum on the upside instead of pushing lower, even though we'd invited, since a push back towards 131 is a good opportunity to think about a long engagement here. And yeah, so definitely worth watching in dollar Canadian dollar then today at or in around, in fact, 43 minutes or 45 minutes around. So it's 1:30 p.m. London time then when this data set will be pushed. And this could be, in terms of the FX markets, the last volatility event then into the trading end of the trading week. Let's have a look also here at Euro USD. In the morning, I started to to really find out something which I hadn't on the agenda till then. That potentially Euro USD is about to bottom out a little here. So after yesterday, there was another push towards 115, the region of the current yearly lows, which were here marked at the end of May. There was a slight push below that level, but only 2 or 3 pips, and then the Euro USD to push higher into the afternoon yesterday, and based on that, we are now seeing something forming, which from a technical perspective we'd consider a so-called bullish divergence. So it's not necessarily a bullish divergence because we didn't make significant lower lows, so that's it's a close call, let's call it. But I think we should or could argue that this is a divergence forming here, and this could be the start also of a corrective move similar to pound sterling USD. So what you can say is, if you look at the experts here, I have the Admiral, I'm sorry. I have the Supreme edition in, so every client from Admiral, and so what we can do here is can have a look, and therefore let's take all these columns out here. We can have a look at the correlation between currency pairs, in this case Euro USD, for example. We can save this, and then we can have a look at the D1, and I just hope that it will update. And it doesn't. I've seen it already. 1 second. Let me just see. So probably it takes a little. So usually you can naturally see that there's a strong positive correlation between those two. So Euro USD and GBP USD. That means if one rises, the other should be expected to rise too, and the other way around. So when we're talking about how it takes probably a little too long, let's take this out. Nevertheless, give it a try. Have a look at the Admiral website. You can download this tool, this Supreme tool here for free there. So now the thing is that based on this technical picture, probably also here in the Euro USD, the advantage can be found on the long side. So meaning that we are probably about to see a bullish move here in the upcoming days too. And the interesting thing is that the pullback already occurred towards the highs here from yesterday. So you can see it here. We pushed above the highs. We just zoom in here. There we go. Beautiful. So it took a little, but now we can see here the correlation with plus 94. That means they are highly positively correlated on a 4-hour chart. In this case, we can also run this with a daily chart, but you will see that those two are positively correlated to each other. So now you can see that we've already seen a retest of this level of the highs from yesterday, which is potentially a good long trigger and probably also the starting point of a rally which can bring Euro USD in the upcoming trading days then as high as 118. So I'm quite positive for Euro USD. after all the skepticism here over the last weeks and months, and in terms of Italy especially. So could be that EURUSD will start at least an attempt here to attack this region. Let's see whether we'll break it. That's definitely something we have to wait for, and that would be a confirmation that probably we're done on the downside. Nevertheless, thing is that EURUSD so far looks promising, let's say, and if we combine the picture with pound sterling, and we will have the so-called intermarket correlation here, could be that EURUSD and also pound USD are about to see a bottom forming, and bullish also short-term engagements are to be favored here among or above short engagements. And now finally, let's have a look at the DAX and how the picture presents itself here. So when talking about the euro, there's also something interesting happening. The euro and the DAX are usually negatively correlated to each other. That means that if the euro, for example, rises, you will expect the DAX to fall and the other way around. So 1 second, let me just, 1 second. We can also do this here, even though probably a little. Here is the, let me just see, it should be the DAX. So probably will take a little, but it's updated. I will show it. And so what you will usually expect then is that the euro rises, that this should weigh more negatively on the DAX. So yesterday something big happened. In fact, the DAX broke below its May lows, and that was it because it perfectly illustrates here that a potential head shoulder formation is playing. So we have to wait. In fact, of this formation here would take place if we make new yearly lows. But with all this negative around the potential trade war between the US and China currently being speculated above, let's say, and being a topic, and we don't really know how the Chinese will react to the wording, especially from Donald Trump over the last days. I think every time there could be an escalation, and if this falls together with the euro, which starts to correct and pushes towards 118, this is two potential bearish drivers, which could mean that the current positive performance of the DAX intraday today is something which is only kind of in German I usually call it Windbeutel. What's the English word for this? So it's a kind of an air ball, probably. Yeah, I think you know what I mean. So you should be really careful, and probably the bears are definitely in control. I have to say, I think that bears are in control, at least as long as we trade above, and therefore let's have a look here at the hourly chart. As long as we trade below the region around here, around 12,760 to 12,800 points on an hourly chart. So in fact, the current move back here could be the push towards a potential short trigger, and probably into the afternoon, evening with, let's see whether US markets will probably see some pressure, selling pressure, but this could be the starting point to giving back most of these gains if the DAX finds resistance here then, and there's some selling pressure in the US forming. So now I want to answer a question. Okay, there's an interesting question from Peter here. It's a question on how will the equity markets most likely react to the OPEC decisions now taking place. I want to be honest. I doubt that it will have an impact at all. So I'm not seeing a big impact, even though there's a saying. But I don't think that it's that easy. Should be really careful about this. There's also a chance now to run a correlation on this topic here. It's also the 4-hour chart. You can see here euro, it's plus 50 around. So that means there is a at least small correlation. So now we could do the same thing here for WTI. Let me just see. Is this? Yes, there we go. run the same thing here. Will take a little, but I doubt that there will be a big impact on that. You can see it here already. So usually you expect those two, in fact, to be positive, more likely to be positive correlated. So that means here it's tends to be positive. It's not strong positive as it is here between Euro USD and GBP USD, but there is a positive correlation. That means not, if really there's selling pressure building in WTI, you should more likely to expect WTI to go down and the DAX to follow, which would in fact be another potential driver on the downside. And not as usually journalists mainly do, say that there's a negative correlation. So oil prices go down, that should push equity prices higher, and the other way around. So nevertheless, I not overestimate this. So I don't think that there will be such a huge impact, in fact, from this OPEC meeting. And yeah, so in fact, that's it from my end. I already see that's 5 minutes more than we planned to have this meeting here. I hope that's fine. I wish you all the best and a nice weekend. And let's meet again next week on Monday with the strategy webinar on the DAX then it's 6 p.m. London time. If I'm not, no, it's 5 p.m. London time. I'm sorry. Yeah, and that's it from my end.
5 p.m. London time, German time 6. So check out your local time zone wherever you are. We are a big international broker. The English webinars are for our global audience, so check the real time zone for you out. Yeah, enough for that week. Next week, we will have lots of more webinars, like, for example, also real-time daily trade ideas every day, German time 11 o'clock, London time 10 o'clock to the same time. Check it out on next Monday with Jay Medvo with a view to the Forex institutional view. Let's check it out. Monday is coming soon. For now, have a nice weekend. See you. Bye-bye.